Okay. All right. So, okay, let me check. There's another comment. Was not too bad. Yeah, it was not too bad. So guys, this is how we do tutorials. Okay. So what's gonna and I want to clarify this. I've received a lot of complaints that we are focusing on 1601 and not 1602. Guys, these two modules are the same. If you can compare the first assignment for 1601 and 1602, the questions were the same. So that's why we have grouped you together. So if you see a slide written 1601, it's the same as 1602. So don't feel isolated. It's one and the same thing. Okay. So guys, this is how we do tutorials. I do an introduction of the topic. I make use of examples from past assignment. We do the assignment. After the assignment, we do a review. So after this session, okay, I was saying second assignment, and then after we've done the assignment, we do a review. So it's for you to learn how we got the answers. Simple, ABC. Okay. Any question or suggestion? I'm sure most of you got 80 and above. No one got 70. We don't want 70. We don't want anything less than 80. Hey, no questions? No complaints? All right, let's start with question 11. Question 11 says Golfin, a legal firm, is owned by Ems Tugada and has a financial year end 28 February. Computer equipment was purchased by business on 1st June for an amount of 30,000. Depreciation for equipment is provided for on the diminishing balance method at a rate of 15% per annum. The opening balance of accumulated depreciation was 45,000 and of the equipment is 60,000. Now they want us to work out depreciation expense. So guys, this is what we did on our second, I think it's first webinar. We looked at the revision of FAC1602, and most of the revision it's based on adjustments, a statement of profit or loss or other comprehensive income. All right. So now they want us to calculate depreciation. We have two types of assets here, two types of equipment. We have an equipment that was bought during the year, and then we have an old equipment. We need to calculate depreciation for both. So let's start with old equipment. Old equipment. The old equipment, the cost price of the old equipment is 60,000. 60,000 minus its accumulated depreciation of 45,000. What is the difference? Remember, when we calculate depreciation on the diminishing balance method, we need to find the carrying value. So what is carrying value? Cost price minus accumulated depreciation. This is the cost price, 60,000. This is the accumulated depreciation, 45,000. So let's apply the formula here. Cost price minus accumulated depreciation is equals to carrying value. Then you multiply by the given rate. So how much is 60,000 minus 45,000?
15,000.
15,000. You multiply by 15%. How much? 15,000 times 15%.
2,250.
2,250. That is the old equipment. Now we look at the new equipment. New equipment, because it's new, it hasn't accumulated any depreciation. So there won't be any accumulated depreciation for this new equipment. No accumulated depreciation for the new equipment. Okay, so you say 30,000 multiply by the period of existence. It was only bought on the 1st of June, 2022. So if you count from 1st of June, 2022 to 28th February, 2023, it's 9 months. June, July, August, September, October, November, December, January, February. It's 9 months. So this new equipment, it's only 9 months old. So you multiply by 9 divide 12, you multiply by 15%. Even here, we have said that multiply 12 divide 12 because we are calculating this depreciation for a year. So this accumulated depreciation, it's the total amount of depreciation that has been accumulated over the past years. So each and every year we calculate depreciation. So depreciation for the current year, 12 over 12, it's only 2.5. But because this is old, it has accumulated a depreciation of 45,000 over the
Ungafunda
previous year.
into ngenyanga, into abantu abayifunde 3 years.
Stembile, you are making noise. We can hear you. Okay. So how much is 30,000 times 9 times 15%?
3,375 rand.
3,370.
300.
And then you add. Then you add 250 plus 375. How much do you get? Total
5,152. 52.
How did I get 5,625 as an answer here? Double check, guys. 2,250 plus 3,375.
It's 5,625.
Perfect. Any question? 5,625. Okay, no question. So far, so good. We look at the next one. It's about depreciation as well. It says Italy, a catering company is owned by EMS Awuvuyo and is a financial year. And catering was purchased by business on the 1st of September at an amount of 100,000. Then they use a straight line method at 20%, but the opening balance, accumulated depreciation and the equipment. So guys, you start with old again. You say 700,000 times 20%. Why times 20%? Because they are using a straight line method. So it's not like the diminishing balance where you have to get the carrying value. So this one, you just use the percentage. But don't forget, it's the same as saying 12 divided 12, because this is old. This is the accumulated depreciation for the previous years. So what is the current depreciation for this old? This is the amount. How much is 700,000 times 20%?
One hundred and forty.
140,000. Is it? Is it 140,000, guys?
Yes.
Okay, perfect. What about the new one? The new one is 9 months old. You count from September until 28 February, it's 9 months. So you say that 100,000 times 9 months, divide 12 times 20%. Okay, guys, can you see that if you calculate if you calculate depreciation for an old asset, you'd use 12 divide 12 because it has existed for the full period. It has been there. But the new one, it only came at a certain date. So how much here?
$15,000.
15,000. So 15,000. And then how much is 15 plus 140? Okay, sorry, it's 6 months.
1,055.
Thank you.
155,000.
Okay, thank you for spotting
No, the
that.
months are wrong. It's not 9, it's 6.
Okay, thanks for spotting that. From September to February, let me count. September, October, November, December, January, February. It's 6 months, sorry.
It's 10,000, the answer for the new.
10,000. Then we know that 10,000 plus 140 is 150. That's how I got 150,000 rands. Any question?
No.
Sir, I just want to check with the straight line method. You said
Yes.
we only use the percentage.
Yes, and the period that the asset existed for.
Thank you.
Okay, no question, no question. Everyone is still fine. Everyone is comfortable. Okay, let's look at number 13. What are we required to do? Guys, I'm sure that you have watched the introduction of partnership, because after this, we're gonna go straight into the subtopics of partnership. Your profit sharing, your liquidation, your, what they call this. There's a lot of subtopics under partnership. So in the next session, we will discuss those subtopics. So what is the balance of drawings of the Nibandla? Okay, so as you can see here, I'm sure that most students would have used 96,400 plus 83. But in partnership, just know that the salaries that were paid to the partners are also form part of drawings. Okay, so this is what happened here. I said 96,400 plus 83. Let me use this. Okay, I cannot see the amounts. 96,400 plus 83,400. So 96,400 plus, let's go here. Plus 83,400 plus 83,400. 400. How much do you get?
179,800.
179 what?
1,800.
800, like this.
Yes.
Okay, and then you say there's 10,000 of monthly salary. You multiply by 12. You add another 12,000 monthly salary, multiply by 12. The salaries paid to partners also form part of drawings. How much do you get, guys? So I think it's 120,000 plus, if you say 12,000 times 12 months, it should be how much?
14400.
14400 plus 120,000, how much is it?
26400.
26400. Okay. And then I noticed that if I add the 2, I won't get any amount from the options. Then I decided to add the bonus, of which I don't believe bonus should be part of drawings. Bonus of 50,000. Okay. So it's 179,800 plus 264,123 plus 50,000. How much do you get?
493,800.
It's for what?
493,800.
493.
493.
493,800. How did I get 493,800?
I also got that one.
Let me check. Okay, and then when you say 179,800 plus 264, how much do you get? What are the options?
443,800.
Okay, I think they just chose this answer because it's close to 493,800. Okay, so this way 493,800 minus 493,800, 84,000. Okay. I think that's why I chose that answer, because it's almost this, it's close to the answer, which is 4.8. Okay. In fact, the correct answer is
So I
not,
think
yes.
we might have made a mistake with the individual salaries, because they're getting different salaries. The other one is getting 5,000
Oh,
and the other one is getting 10,000.
where did I get 12,000? So, my God. 10,000, not 12,000. Okay.
You made a mistake with 12,000.
Oh,
It was
no.
supposed to be 5,000.
And then what should be the total? 10,000 times 12, it's 120. 5,000 times 12, we don't know. 120,000 plus the unknown answer.
So 120 plus
Okay.
60,000.
It's 180,000.
Yes.
Then are we getting 409,800?
Yes, if we add the totals together, 179,800 plus 180. We're still missing the bonus of 50,000.
With the bonus, then it's 409,800.
The
If we
bonus added, it will be 409,800.
409. Oh,
So the 264,000 needs to be changed to 180,000.
180,000.
Yes.
Okay. Any question?
No.
Okay, everyone is fine. Then the next one, I'm not gonna look into the theory. I want us to look at the calculations only. Umthombo, a water purification business, has a 28 February 2023 and it made sales of 304, depreciation, advertising, and salaries. Calculate the net profit. What is net profit? Net profit, guys, if you want to calculate your salary, your net salary, how do you calculate your net salary? Anyone? Net salary.
Income subtract expenses.
Income minus all the deductions. So here the sales, the money that were made, that was made from sales is the income. Depreciation is an expense, advertising is an expense, salaries is an expense. So you say 304,000 minus all the expenses, of which is 36,200. You minus 2,500. You minus 53,000. What is the answer? Should be 2.
$212,300.
202. Okay, so 212. I'm sure that, guys, next year you will be assisting students who are doing 1601, 1602. Okay, because we have seen that this module are simple. Both modules are simple. Okay, 17. The following information relates to Jablan Fabrics. Jablan, total sales of 850 for the year. Okay. Says the following transactions on the 3rd of Jan, fabrics sold. Fabrics valued at 280 to my stores on the credit. This is the only transaction between Jablan and Jabulani allows a discount of 15% on account settling within 30 days. Okay. And then on 1st, my settled their account in full. So it means that they were granted a discount. So we take the amount of the sales made to my, which is 280,000. You say 280,000. This is bad now. 280,000. I think I need to write here. 200. Oh, why is it doing like this? I think I should write here. 280,000 multiply. They were given a discount of how much? 15%. So how much is 100 minus 15? It's 85. So they only took 85% from 280. So if you say 280 times 85%, you get 238,000. And then you add the 238,000 with 850. How much do you get?
Option B.
And then it's option P, 1088. Yeah, you see this 85%, it confuses a lot of students. So this is what you need to do to avoid this confusion. You multiply by 15%, 280,000 multiply 15%, it's 42,000. 42,000. Then you say 280,000 minus 42,000. 280,000, and then you get 38,000. Okay. So how did I get 85? Guys, if they are giving you a 15% discount, it means you won't pay the full amount, you will pay 85% of that amount. If they say they will give you 10% discount, it means you will pay 90%. So the discount is always discounted from 100%. You minus from 100%. Any question?
No.
Guys, I've been talking and I'm on mute. No one told me. Why are you sleeping there?
No.
No.
Okay, I was saying that 6 months overpayment of 20,000. So 20,000 will be considered as number one, prepaid expense. Number two, she moved into a new premises on the 1st of August and paid 85,000 rands per month. So we count from August to December, it's 5 months. She made a payment of 6 months. So guys, if you are required to pay for 4 months and you pay for 6 months, what is the prepaid? How many months did you pay for in advance? Anyone?
Please repeat the question.
You are supposed to pay for 4 months because we are left with 5 months, August, September, October, November, December. And then you pay for 6 months. How many months were paid in advance?
1.
It's only 1 month. So from this, we're gonna take 85,000 because it's 1 month. So every month she pays 85,000. So this is what we need to do, plus 85,000 rands. That's how I got 105,000 rands. Any question?
No.
Okay, perfect. Let's look at the next question. On the 28th of February, Kuselo and Nande decided to form a partnership trading as United. Partnership will commence trading on 1st March and both partners are actively involved in the partnership. Kuselo and Nande are accordingly through a partnership document and stipulating the following. Kuselo will contribute 100,000 cash towards the capital. Nande will contribute 40,000 in cash, a delivery vehicle with a fair value of 60,000 physically. Now, what is the total contribution? It's simple. You add everything here. 100,000 plus 60,000 plus 40,000 plus 50,000, and it's 250,000. Any question? So the capital is not only in a form of cash, even your non-current assets can form part of capital. Anything that the owner contributes into the business is called capital. Nzamela Traders, a partnership between Sandile and Sianga. It's here and it's 32. We have additional information. The partners, Sandile and Sianga, share profit in the ratio 2:1. Sandile is entitled to an annual salary of 450,000. Siang is entitled to an annually of 750%. Okay, information is too long, but let's look at what the question requires us to do. What are the capital balance at the end? Sorry, the equity, the opening equity. So in partnership, guys, two accounts should be considered when determining the equity, which is capital and current account. So you need to be careful here, because if the current account is marked as DR, it means that the balance is unfavorable, it's negative. So this is what we need to do. We need to say capital 200,000, capital Sianga plus 100,000, current account Sandile plus 19,000. When we consider the current account of Sianga, we need to subtract because it's debited. So 200 plus 100 plus 19 minus 12,000. How much do you get?
$307,000.
307,000. Okay, so guys, here you're given a profit of 115, and they want you to calculate how much will be shared to Sianga. We go back to the information to check the sharing ratio. What is the share profit ratio? What is the profit sharing ratio? I think I saw 1:2. 1:2.
Yes. 2:1.
Oh, 2:1. Sandile and Sianga share. Guys, so if it's given like this, it means that what do I write? Sandile will get 2. Sia gets 1. And the total ratio is how much? How much is 1 plus
3.
2? Is 3. Okay. So if I want to calculate for Sia, I will say amount multiply 1/3. Now, in this question, we are given a profit of 1 million. Let me check. 1 million. 1,150,000. So this is what you need to say: 1,150,000 multiply 1/3. Then you get 383.
The answer is option B. It's 383,333.
Yes. Any question, guys? Any question before we go into this one? So guys, with the denominator, you use the sum of the ratio. If the ratio is 2 to 3, the denominator will be 5. You always add. This is what belongs to the partner. This is the total. Okay. Now they want us to calculate depreciation for vehicles. Do we have vehicles here? Depreciation is calculated on depreciation using the diminishing balance method. So guys, you will use the method that we did on the previous question, whereby you take the cost price, you minus the accumulated depreciation, the difference you multiply by the rate. So if I look at the information, where's the information here? Information. Yes, all the time. All the time we use the ratio. Okay. All information is here. The cost of the vehicle is 70,000. Its accumulated depreciation is 21,000. The difference between the two, 70 minus 21, is 49,000. And then you check the rate of the depreciation, it's 20%. So 49,000 times 20% should give us the answer. 49,000 times 20% should give us the answer. You can confirm 49,000 times 20% should give us 9,800.
Correct.
So guys, that is the difference between the straight line method and the diminishing. If it was straight line method, then we would have said that 70,000, which is the cost price, multiply 20%. But because it's diminishing, you say cost price minus accumulated depreciation, it's equals to carrying value. Then you multiply by the given rate. Cost price is 70,000. The accumulated depreciation is 21,000. The carrying value is 49,000. 49,000 times 20% is 9,800. Yes, Dudu, that's correct. We split according to the ratio. Advertising cost. What is the advertising cost that will be considered? So guys, I see information here. It says advertising exclude an amount that is paid, 10,000. Why does it exclude? It needs to exclude. So because it exclude and it's payable, it's an accrued expense, we add accrued expenses. If you did not pay any of your expenses, then you need to pay. Okay, if you did not pay your insurance company will call you to say that you must pay this amount, your rent expense. So this 10,000 will be definitely added to the amount given. If you check at the advertising cost here, it's 55,000. So if you add 55,000 with the 10,000, it gives you 65,000. That's it for today, guys. Let's meet. We will communicate the correct schedule because we're gonna go back to 2 days a week. So we need to finalize the schedule for you, but it will be at 8, during the week at 8. Thank you very much.